KOSPI Crash, life shattered by the greed for profit. In the morning in Seoul, a man opened his phone, and for a few seconds, he just kept staring at the screen. The portfolio that was green until yesterday was completely red today. His hands were trembling, because this was not just a stock market loss. It was the shattering dream of his marriage, his house, his family, and many years of savings. Some investors thought that Samsung and SK Hynix would make them rich. However, that very trade brought them to a turning point where a profit celebration turned directly into a financial shock. The question is simply how the world's hottest stock market suddenly became a story of fear. And is this just South Korea's tragedy or a warning signal for every investor? Until a few weeks ago, South Korea's KOSPI index was the star of the global market. The AI boom, memory chips and semiconductor demand had turned it into a rocket. Investors felt that AI was the future, and if money was not invested in this future, a lifetime opportunity would slip away. This very FOMO, that is, the fear of missing out, is the market's most dangerous fuel. A person thinks that just a little more risk, and then life will change. This is what happened in South Korea. Samsung Electronics and SK Hynix, two chip giants, became the heroes of the entire market. According to Business Insider, these two companies played a major role in KOSPI's first half rally, but this very concentration also made the market fragile. When the market relies on just a few names, the index does not become strong. Instead, it becomes top-heavy. From the outside, the tower looks high, but from the inside, the balance is weak. People's trust in Samsung and SK Hynix was not just in the companies. That was trust in the AI revolution, trust in data centers, and trust in future demand. When shares like SK Hynix and Samsung gave explosive returns in a year, retail investors felt that this was not normal wealth creation but a once-in-a-generation opportunity. However, this is the biggest trap in the stock market. When profit starts looking easy, risk becomes invisible. KOSPI touched a level above 9,000 in June, and some reports mentioned a rally of more than 100% from January to June. Now imagine an investor watching his friends make money. Screenshots, profit posts, and lifestyle purchases are visible on social media. He thinks, why should I stay behind? And right here, investment gradually begins to turn into greed. First, he invests a little money. Then profit is seen. Then confidence comes. Then he invests savings. And then, perhaps borrowed money as well. According to Reuters, small investors in South Korea increased exposure through borrowed money and leveraged products, and in the sell-off, that very leverage became a pain amplifier. Leverage means taking a big bet with less money. When the market goes up, the profit feels manifold. However, when coming down, the loss cuts manifold as well. This is the reason why a leveraged trade looks beautiful and dangerous at the same time. It takes you up like a lift, but does not offer stairs during a fall. In the last days of July, the mood suddenly changed. Investors started asking whether AI spending would really give that much profit, or if valuations had moved too far ahead. Competition from Chinese chip makers, stretched expectations, and a global tech sell-off weakened confidence. However, the real damage happened when forced selling began. According to a Reuters report, KOSPI fell up to 12.6% in a single day, a trading halt occurred, and the market lost nearly 40% value from its peak. When the market falls, an ordinary investor sells. But when leverage falls, the system also forces sales. Brokers close positions, ETFs rebalance, and panic selling becomes automatic. Then the fall moves not just through fear, but through mechanism as well. SK Hynix showed strong profit growth, yet the stock fell. The reason was not that the company had become bad, but that expectations were in the sky. In the market, many times even a good result can look bad if investors are expecting impossible perfection. Fast Company wrote that SK Hynix shares were down by more than 45% in a month, and Samsung had also broken down by more than 35% over the month. Now look at the life of an ordinary investor here. He was not reading the balance sheet, he was watching others profit. Someone invested marriage money, someone invested money for house installments, someone traded taking a loan, and someone thought that a stop loss would not be needed. In a money control report, painful stories of retail investors surfaced based on social media posts, where many people talked about losing even apartment funds and wedding savings. One user claimed that initially a profit of more than 600 million won was visible, but within a few days that same position went into a loss of 700 million won. This was not just a number. It was a psychological whiplash, where the mind holds on to the memory of profit, but the screen shows a loss. Another investor wrote that he put wedding savings into the market. When 40% of the money sank, not just the portfolio broke, but future planning broke as well. The most viral story was the one about the apartment fund. A family had saved money for a house over 15 years, then entered the market seeing the Samsung rally. Initially, there was a profit. So much confidence came that expensive phones were bought for children and luxury gifts for the spouse. However, the market turned and more than half the money was gone. Now the question of the next apartment installment stood in front of them. This story is not just about greed. It is also about the emotional pressure that middle-class families feel. Houses are expensive, salaries are limited, and inflation is real. In such a scenario, when the market shows fast returns, it starts feeling not like an investment but like an escape route. However, the stock market is not an escape route. It is a risk market where uncertainty lies hidden behind every return. In a third story, an investor said that 2/3 of his property went up in smoke. It contained profit, savings and loan money as well. This line stops any investor and forces them to think. Are we investing, or are we putting our life support system on a casino table? Another trader shared that despite having experience, he did not set a stop loss. He lost a massive amount in just 1 month and sleep disappeared. A stop loss is not a magic shield, but it applies brakes on ego. It says that if I am wrong, I will stop the loss right here. The problem is that in a bull market, people assume that they cannot be wrong at all. When the chart goes up, discipline feels unnecessary. And as soon as a fall comes, that very discipline becomes a life jacket. Whoever does not have it gets swept away in panic. There is another twist in this South Korea story. On July 31st, KOSPI also showed a historic rebound of nearly 18%. This rebound shows that the market sometimes gives a violent bounce even after a crash. But a bounce does not erase the pain, especially of those whose positions have been forcibly sold out. This is the cruelty of the market. Whoever can hold gets the rebound. Whoever got forced out in leverage watches the comeback from the outside. Therefore, just picking the right stock is not enough. Right position size, right time horizon, and right risk capacity are necessary. If the money belongs to a house installment, marriage, emergency, or has come from a loan, then that is not market experiment money. Only that money should be in the market which, upon being lost, does not shake the foundation of life. This is a boring rule, but this is what saves you. In the story of KOSPI, even AI is not the villain. AI can be real, chip demand can be real, and companies can be strong. However, even real technology can become an overvalued stock. A great company at the wrong price can become a dangerous investment. In the dot-com bubble, the internet was not fake. The internet was truly the future. However, many investors identified the future correctly, but chose the price wrong. South Korea's AI chip trade asks this very question as well. Is the future powerful? Perhaps yes. Is buying at every price correct? Not necessarily. When a theme becomes very popular, risk is created not in the theme but in the crowding. Everyone wants the same door, and the exit becomes too small. Reuters also cited the unwinding of leverage trades as a major reason for the sell-off. Meaning the fall was not just of fundamentals, but also of positioning. Positioning means how many people are standing on the same side. If everyone is in the same boat, even a light wave shakes the boat. And if some people are sitting on borrowed money, that very wave turns into a storm. Retail investors often think that big institutions manipulate the market. However, many times the retail crowd itself creates a bubble. Social media profit posts, influencer confidence, Telegram groups, leveraged ETFs, and FOMO, these combine to create an emotional market. In this emotional market, risk management feels boring. Diversification feels slow. Keeping cash feels foolish. However, after a crash, those very boring things become a survival strategy. Diversification is not a shame, it is insurance. If an investor's entire money was only in Samsung and SK Hynix linked bets, he was facing concentration risk, not company risk. If he took a loan, he was facing debt risk along with market risk. If he invested emergency money, he was facing family risk along with financial risk. And if he did not set a stop loss, he was facing discipline risk as well. Therefore, the KOSPI crash is not just the fall of an index. It is the story of 4 layers of risk. Greed was the first layer. Concentration was the second. Leverage was the third. And denial was the fourth. When these 4 come together, a market correction becomes a personal disaster. This is the reason why many investors are not safe even after seeing a profit. As long as a profit is not booked or protected, it is just a promise written on a screen. The market's unrealized gain boosts the ego, but a realized loss reduces the bank balance. The most painful part of this story is that many people were trapped not in the wrong company, but in the wrong size. If that same investment had been a small allocation, the loss would have become a lesson. But investing life savings turned the lesson into a trauma. The stock market can create wealth, but it also punishes impatient people quickly. Whoever does not respect the market reminds them that price does not look at anyone's need, marriage, EMI or dream. Price looks only at buyers and sellers. Emotion is yours, not the market's. The event in South Korea is a mirror for every Indian investor as well. Here too, when a theme runs, people run blindly in small caps, IPOs, options or sector rallies. In every cycle, new names come, but the story remains the same. First profit screenshots, then borrowed confidence, then panic, then regret. Therefore, every investor should ask themselves, if this stock falls 40%, will my life change or will only my portfolio change? If the answer is life, then the position is wrong. If the money is for necessity, it should not be in the market. If the investment is not understood, entry should not be made just by watching others' earnings. And if profit is coming very fast, one should definitely ask at least this: is risk also increasing just as fast? KOSPI gave investors a harsh but valuable lesson. Before winning in the market, one has to learn to survive. Chasing returns is easy, surviving risk is difficult. The AI boom had turned South Korea into the world's most exciting market. But that very excitement forced many people to forget that the market is never a one-way road. Today a rebound may be visible on the screen, tomorrow a crash may be visible again. Volatility is not just the movement of a chart, it also shakes a person's sleep and family planning. Therefore, the biggest question is not whether KOSPI will go up again or not. The biggest question is how many investors will repeat the same mistake in the next rally. Because every time, the market comes wearing a new mask. Sometimes AI, sometimes crypto, sometimes real estate, sometimes small caps, sometimes options. However, the test inside remains the same. Can you maintain a discipline bigger than greed? The day an investor understands that making money from the market is necessary, but surviving in the market is more necessary than that, his real investing journey begins on that very day. South Korea's red screen tells us just this. Profit can change life, but profit without risk control can burn life as well. And perhaps this is the deepest payoff of this entire story. The most expensive loss in the stock market is not money, but that trust which a person loses in himself. Therefore, the next time a stock turns into a rocket, do not just ask how high it will go. Ask this as well. If it comes down, what all will it take down with it among my dreams?
If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible, but in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.